Hey, what's up everybody? It's Shishir, and today we're diving deep into the world of Bitcoin. We're going to break it down in a way that anyone can understand, from its origins to how it works, how you can actually use it, and why it's causing such a stir in the financial world. By the end of this video, you'll have a clear understanding of what Bitcoin is, how it works, and why it might just be the biggest financial revolution since the internet itself. So, buckle up, and let's get started. So, what exactly is Bitcoin? In the simplest terms, Bitcoin is a digital currency, often called digital gold. Now, before you start picturing virtual coins flying around, understand this. Bitcoin exists purely online. There's no physical representation of it, like a dollar bill or a gold coin. It's all digital. Think of it like this. Remember when you were a kid and you'd play video games with in-game currency? Bitcoin is kind of like that, but with real-world value. It was created back in 2009 by an anonymous person or group of people going by the mysterious name Satoshi Nakamoto. We still don't know who they are, but their goal was clear: to create a decentralized currency, meaning it's not controlled by any government, bank, or institution. See, with traditional money, you've got governments printing more whenever they want, central banks setting interest rates, and banks themselves acting as middlemen for every transaction. Bitcoin was designed to be different. It's like the wild west of money, where no single entity calls the shots. Bitcoin runs on something called blockchain technology. Imagine a giant digital ledger, like a giant Excel spreadsheet, that keeps track of every single Bitcoin transaction ever made. This ledger is called the blockchain. But here's the kicker. This ledger isn't stored in one place. It's distributed across thousands of computers worldwide. So when you send Bitcoin to someone, your transaction gets broadcast to this entire network of computers. These computers, called miners, then compete to verify your transaction and add it to the blockchain. They do this by solving complex mathematical problems. It's like a giant, digital Sudoku puzzle. The first miner to solve the puzzle gets rewarded with, you guessed it, Bitcoin. This process is called mining, and it's how new Bitcoins are created and released into circulation. Once a transaction is verified and added to the blockchain, it's there forever. This decentralized and secure system is what makes Bitcoin so revolutionary. Because it's spread across so many computers, it's incredibly difficult to hack or manipulate. This decentralized nature also means there's no single point of failure. Even if one computer goes down, the rest of the network keeps humming along. That's the million-dollar question, or should I say the potentially multi-thousand-dollar question, given Bitcoin's volatile nature. Bitcoin's value comes from a few key factors. First, there's scarcity. Unlike traditional currencies where governments can print more money at will, Bitcoin has a limited supply. Only 21 million Bitcoins will ever exist. That's it. This built-in scarcity creates a supply and demand dynamic that can drive up the price, especially as more people adopt Bitcoin and demand outstrip supply. Second, there's decentralization. As we discussed, Bitcoin isn't controlled by any government or financial institution. This means it's immune to things like inflation caused by governments printing more money or shady dealings by central banks. This independence is a big draw for people who are wary of traditional financial systems. Third, Bitcoin is globally accessible. Anyone with an internet connection can use Bitcoin regardless of their location or credit score. This makes it incredibly useful for international transactions, remittances, and even just storing value in countries with unstable currencies. Finally, many people view Bitcoin as a store of value, much like gold. So you're probably wondering, how do I actually get my hands on some Bitcoin? Well, there are a few ways to do it. First, you can mine it. Remember those miners we talked about, the ones solving complex math problems to verify transactions? They get rewarded with Bitcoin. However, mining Bitcoin these days is incredibly difficult and energy intensive. You need specialized, expensive hardware and a lot of electricity to compete with the big mining farms out there. Unless you're ready to make a serious investment in mining equipment, this probably isn't the most practical option for most people. The second and most common way to get Bitcoin is to buy it. Just like you'd buy stocks or bonds, you can buy Bitcoin through cryptocurrency exchanges. There are tons of exchanges out there like Coinbase, Binance, Kraken, and many more. You'll need to create an account, go through some verification steps, kind of like opening a bank account, and then you can start buying Bitcoin with your local currency. Think of it like using an online brokerage account, but for cryptocurrency. Finally, you can earn Bitcoin. That's right, some companies and individuals are willing to pay you in Bitcoin for your goods, services, or even just for completing tasks online. Now, once you've got some Bitcoin, you need to store it securely. This is where things get a little bit technical, but stick with me, it's important. You see, when you buy Bitcoin, you're not actually buying physical coins. Remember, it's all digital. What you're actually getting are the private keys that give you access to your Bitcoin on the blockchain. Think of these private keys like the password to your Bitcoin wallet. Lose your private keys and you lose access to your Bitcoin forever. No password reset button here, so how do you keep your Bitcoin safe? There are two main types of wallets, hot wallets and cold wallets. Hot wallets are online wallets, kind of like digital bank accounts. They're convenient for everyday transactions, but they're also more vulnerable to hacking because they're connected to the internet. Some popular hot wallets include MetaMask, Trust Wallet, and Coinbase Wallet. Cold wallets, on the other hand, are offline wallets, usually hardware devices that look like USB drives. Because they're not connected to the internet, they're much more secure and less susceptible to hacking. Some popular cold wallets include Ledger and Trezor, so which type of wallet should you use? It depends on your needs and risk tolerance. Now, while Bitcoin itself is incredibly secure thanks to the blockchain technology, there are still risks involved. Just like with any new and emerging technology, there are bad actors out there looking to take advantage of people. One of the biggest risks is scams. Because Bitcoin is decentralized and transactions are irreversible, it's a prime target for scammers. You'll see everything from fake investment schemes promising unrealistic returns to phishing attacks trying to steal your private keys. Be very wary of anyone asking for your private keys or promising guaranteed returns. Remember, if it sounds too good to be true, it probably is. Another risk is phishing attacks. Just like with traditional email phishing scams, scammers will try to trick you into clicking on malicious links or giving up your private keys. Always double-check the URL of any website you're visiting, and never enter your private keys on a website you don't trust. And speaking of private keys, losing your private keys is another major risk. Remember, your private keys are the only way to access your Bitcoin. If you lose them, your Bitcoin is gone forever. There's no central authority to recover your funds. So, we've covered a lot of ground, but what does it all mean? What's the big deal with Bitcoin, and what does the future hold? Well, Bitcoin's impact is already being felt around the world. It's challenging the traditional financial system, offering an alternative for people who are fed up with inflation, high fees, and lack of transparency. We're seeing major companies like Tesla and PayPal adopting Bitcoin, and even countries like El Salvador making it legal tender. This growing adoption is only going to increase Bitcoin's visibility and potentially its value. But Bitcoin's impact goes beyond just being a digital currency. The underlying blockchain technology has the potential to revolutionize countless industries. We're already seeing blockchain being used to improve supply chain transparency, track goods and services, and even verify identities. And as blockchain technology continues to evolve, its potential applications are limitless. As for the future of Bitcoin, well, that's the million-dollar question, literally. Some experts believe Bitcoin's value could continue to rise exponentially as more people adopt it, and its scarcity becomes even more apparent. Others are more cautious, predicting that Bitcoin's volatility could lead to a major correction. So there you have it, Bitcoin explained. It's more than just digital money. It's a revolutionary shift in how we think about finance. It's about decentralization, transparency, and putting the power back in the hands of the people. Whether you're looking to invest, learn more about this cutting-edge technology, or simply understand what all the hype is about, diving into the world of Bitcoin can be incredibly empowering. It's a chance to be a part of something new, something innovative, something that could potentially change the financial landscape forever. If you found this video helpful, don't forget to give it a thumbs up, share it with your friends, and subscribe to the channel for more videos on personal finance, investing, and the future of money. Until next time, stay informed, stay curious, and keep crushing it.